G'day everyone, my pleasure to be speaking with you today. This presentation has been uploaded on our website. I certainly encourage you to read it in full afterwards and get in touch if you have more questions. Let me tell you about Alkane. We are a producer and we've been producing gold for many years, but particularly from Tomingley Gold Mine since 2014. The base of our operations, Tomingley, is halfway between Dubbo and Parkes in the Central West, which I don't need to explain the location of that to this audience at least. And we have, as well as at our Boda Kaiser exploration deposit, you can see on the right of the map that we've released a scoping study at the start of July. I'm going to tell you about those two things. This year, we'll be producing somewhere between 70 and 80,000 ounces. I'm going to go into that look ahead with you. I'll explain why our all-in sustaining cost is higher this year than it's been previously. Last year it was $21.57. We're moving to 100,000 ounces through the development of a project that we've already had approved and we've got our debt position in place for. We're spending a lot of money on capital growth, which we're well on our way through. And Boda Kaiser is an absolutely massive project that we have already taken through to an indicated resource. There is 15 million equivalent ounces, 8 million ounces of gold and 1.5 million of copper in that resource. And we'll talk you through some of the early dynamics of that scoping study. A little on us as a corporate profile. Our share register is mostly held by people like you in this room. So 60%, 2/3 roughly of our stock is held by retail investors. About 20% is held, or just under 20%, by our chairman, Mr. Ian Gandel, very successful businessman. And most of the funds that you see there are index funds, so the VanEck, the Vanguards of the world. So most of our stock is held by index funds in funds. We don't have many fundamental funds. And so we're very subject to vagaries in the share price. And our last share price fall was 2 funds each holding 6 million, quant funds selling out. I can't explain why, and they don't talk to me. Which is the nature of computers. So we do have debt and hedging in place. Our hedging position is 87,000 ounces out to 2027, which we struck a year ago, or well, maybe even a year and a half ago. It's at 28.40 an ounce Aussie, and we have put options at 3,000 an ounce to cover the rest of that. The takeaway from that is, no matter what happens in the gold price, between now and the middle of 2027, we won't be selling any ounces for under 3,000 Aussie. It's as simple as that, apart from the hedges we already have in place. So let me tell you about the mine at Tomingley. Lots of great photos there. It's an open cut, it's an underground. Here is a schematic on the right-hand side of your picture of the mine. We ran 4 open cuts there in that first series of bars on the left hand of production. I'll turn and show you on this one. This period through here was open cut mining. We did about 65,000 ounces a year at about $1,100 an ounce. We shifted underground and ramped it up, and we ran at about $1,100 an ounce. And last year were at $2,137 an ounce, doing 60,000 ounces as we went to a new mining area to the south. That is the area that's no longer grey because it's bold and exciting. Down at the south of the deposits there, that is our new San Antonio and Roswell mine. We have started mining there now. The grade is higher, and I'll explain that detail. And so we're ramping through to 100,000 ounces. A lot of people say to me, I'll just go briefly to our capital that we're doing. A lot of people say to me, wow, you guys are a capital risk. I get that, but we have been operating for 10 years and we've developed several mines, and at the moment we are most of the way through completing a paste plant and flotation regrind construction at present. I don't have photos, but if you come to our booth, we're in the hall just over here afterwards, I can show you proof of life on the existence of the operation. So if you look at our ramp-up period that we have coming up, over the next 6 odd months, but before Christmas, we will have finished the paste plant on a new mining area and we'll put in a flotation regrind circuit. Why have we done that? The paste plant gives us full ore recovery, and the flotation regrind circuit lifts our recovery from the ore of another 7%. We're then working on moving the Newell Highway, which runs through the centre of the deposit. Everything I'm talking about is approved. It's all approved. There's no more government approvals. We're not sitting around waiting for magical approval fairies. It's all done. And We are then moving that open and starting an open cut, which lets us run to 100,000 ounces. But what you say to me, what if the gold price tanks? You guys are committed. No, well, then we just wouldn't move the highway for a few years and we wait for it to revert. So we've got an 80,000 ounce run rate from the existing operations that we're developing, and we're moving to 100,000 ounces by developing the open cut deposit. So let me talk you through this transformational period for us. This is detail that I haven't provided to people, but I'm tired of people asking me about exactly what it means to ramp up a mine. Turns out, all you do is just keep operating. So this is, let me talk you through it. So this quarter that we're in, we're going to do somewhere between 16,500 and 19,000 ounces. In July, we did 6,500 ounces. We're on track for over 6,000 ounces, right? So this is looking like maybe an 18,000 ounce quarter. And you can see that what's happening across this period of time is we're going to new mining areas and the grade's improving, then the grade falls when the open cut comes in. At the same time, as we slowly increase our tonnage run rate, that's because we have things like an ore pass, we've got new loaders, but this is normal vanilla bread and butter for us in terms of our production. Our all-in sustaining cost is higher in this period because we're developing vertically both up and down so that we can increase our production rates in the years going forward. And then in the following year, we fall to sort of an average of $1,900 an ounce Aussie. That's what's occurring. This is business as usual for us. We've been running for over 10 years. So I certainly encourage you, if you're interested in a gold producer, come talk to me in the booth, have a look at our stock and understand it, understand its valuation, understand the cash flow that we're going to be generating going forward. Because over the next 2 years from the existing position we're in, we're going to increase our production by 20%. We've got our head grade increasing. Our recovery is going in. Because we've just spent $40 million doing a plant to increase recovery, you want to hope it would. Our sustaining and growth capital is falling off, right? So we are spending money at the moment and that spending is falling away, and therefore we have a decrease in our all-in sustaining costs. So I encourage you to check it out. This is a lookout over the next 5 years. So you can see that we move slowly through to 100,000 ounces and our all-in sustaining costs comes down. And this will be years 11 to 16 of the mine life. The mine life goes beyond that. We've got resources and reserves. We've got another 2 million ounces in resource. The mine life goes beyond, but this is the next 5 years defined. So we do have production beyond the current plan. That's the underground drive we already have built to our new mining area. Goes under the Newell Highway, so as you drive over it, 400 metres underneath you, someone's making money, and so this is the new mining area we have that we're building the paste plant on top. So regional exploration continues. There's a lot going on. Let me tell you about Boda Kaiser. This is a scoping study that we did on Boda Kaiser deposit. So in 2019, we drilled the discovery holes at Boda, and very, very pleased. Since then, we've spent nearly $50 million drilling this out to indicate a resource. As a result, like I said at the start, we have over 8 million ounces of contained gold, over 1.5 million tonnes of contained copper. If you put all that into current gold price, it's about 15 million ounces. So we looked at, what might this look like? How might people put a value on this? If we mill this at 20 million tonnes per annum, remembering Katie is about 33 million tonnes per annum, Olympic Dam's about 10 million tonnes per annum. If we build this at 20 million tonnes per annum, then these are the type of metrics that you would see. You would see us make circa 160,000 ounces of gold a year, 35,000 tonnes of copper. That's equivalent of about 250 to 280,000 ounces a year. And if you put the gold as a byproduct, the copper as a byproduct to offset against the cost of gold, you make it at $630 an ounce. If you wanted to look at it in terms of a copper mine, you put the gold credits against the copper, you'd be making copper at 20 cents a pound. And so you can see substantial cash flow to come from that. We're not saying that we're about to launch this right now. There's a whole approvals process and everything to go on here. We're doing the baseline environmental studies, but we already have an indicated resource here. And so this is just to give people a flavour for what we're doing. So what are we doing now that we have that? This is all the drilling that we've done. That resource goes down over 1 kilometre deep. The numbers I just gave you are on the open cut deposits with a very small underground. I haven't looked yet at sub-level caving. We'll look at that going forward. So there's been millions of dollars going to this. So what we're doing now is we're exploring up to the northwest to see if we can find higher grade material to further enhance the deposit. We're doing the environmental studies on the ground because the approval process is what we'll be working our way through. We're doing further studies on things like, can we look at bulk tonnage underground mining operation? and we're engaging with potential partners. What do I mean by that? If you're going to do a $2 billion development and you're a company that currently makes or will be making 100,000 ounces, well, obviously you need a major joint venture partner. What might the shape and form of that look like? Well, typically it will be someone that has a balance sheet and authority in the capital markets to show that they can carry that forward, but at the same time leaves us with money on the table and a shareholding representative of the effort and discovery and intellectual property that we put into discovering. So that's what we're doing. So I have meetings lined up in North America on this particular thing in 2 weeks. So that's just part of the process that we have for trying to create value for shareholders. So let me summarise. We have Tommingly. We've got cash in place, debt in place and hedging to execute this project on its way to 100,000 ounces per annum. We're spending a lot of money to get there, but we're spending it off a base of an existing and approved asset. In Boda Kaiser, we have a large sleeping giant that, if executed today at today's spot prices, would have a 4-year payback. We're doing all the baseline work. And to explain to you why we believe we can do the baseline work, we've had 3 major projects approved in New South Wales in the last 12 years. It's not our first time down this path. We think our stock represents great value opportunity for shareholders. You guys should check it out for yourself. The stock code is ALK. I'm in the room next door, and to incentivise you to come and see me, if you're still going to be here at 5:45 tomorrow, Kerry is going to draw a little gold bar from ABC Bullion Refinery. It's only 5 grams, so it's only worth $700. But if you put it under your pillow and you save it for a rainy day, put it next to your gun rack if you're one of those kind of people, then you too can use it to buy your freedom at a later date. So come and see me next door. Check out Alkane ALK. Really happy to talk to you about it more. Thanks very much.